Hi everyone, Joshua Bunker here from Guerrilla Trading. Hope you're all having a fantastic weekend. So I'm going to do the forecast video now, show you exactly what I'm looking at in the market going forward, any trades I'm in, any trades I was in, how I'm managing them, and the thought processes that goes behind all of my trades. And this is one of the key things about you guys learning, right? You're learning, you're basically looking over a shoulder of a trader. And this is why I do the trade recaps, okay? And I do the forecast because I want you guys to really understand what I'm looking at and how I'm looking at it. Now, one thing I want to say is a massive congratulations to the whole community. I've been going and looking through the community forums and everyone is so willing to help each other. It's just so nice to see. And it's by far the best community out there, okay? That's without a shadow of a doubt. Like, I look at our community and all I see is people willing to help each other, right? Whether it be on the interactive backtesting, whether it be on the trade floor, whether it be on the off the topics. Some people will put something on there and someone will reply and give you their detailed reply on what they did, right? And this is one of the key things that I really wanted to hammer home this week was about the community, right? What you have to understand as traders, most people don't understand trading, especially if they're not in the trading circle, as in if they're not already traders. Most people look at trading in a negative way because, again, when you don't understand something, generally you get a negative feel for it. And also you have to understand that there are so many people out there, right, that have tried these get rich quick schemes. They've seen these people on Instagram that said that they can make them triple their money in a week and all of this other garbage that people say on there. And obviously they fall for it, right? And they've obviously been hurt. So obviously understanding that when people do give you that negativity, it's not based on something they don't know, but it's based on sometimes them being hurt themselves, right? So of course, this is why a community is so important, because everyone within our community, right, we are all willing to help each other. We're looking out for each other. We want everyone to succeed. As I've said from the beginning, right, when we started Guerrilla Trading, all that we want is to have the most consistently profitable traders within our community. That's the only goal that we have, right? And all we do, me and the team, all we do is strive to make you guys better. Anything that we can do, we do the V meetups, right? Where students get out of their comfort zone, really help other students learn from their mistakes or learn from something that they do that may help you. So again, everyone learns in different ways. So the reason we do these V meetups is that you guys can see other people's viewpoints on how they backtest or how they use a checklist or how they look at trading in any aspect of trading. And it really helps some people because you might say, right, I've seen Josh's videos multiple times. And for example, I may say a few things in my video every single time, but you just don't click on it, right? Because you don't have the experience or because you have to remember your subconscious is looking for certain things that it recognizes. It's looking for things that it understands, that it feels comfortable with. So sometimes I'll say something, but naturally your subconscious will not register it because it's taking so many things in at once. Sometimes it misses it. So the key thing that I like about the community or about the V meetups or any of these meetups that we do, right? I know Eddie done one this weekend. He done the Northwest meetup. And again, all of these ones, same like James. James does the coffee morning and Adam does the afternoon tea. These things that we do is to try and really get the community involved because you have to understand, right? Trading is a lonely business. There's no ifs or buts about it. It is a lonely business. It's you and your thoughts when you're trading. So what we're trying to do is we're trying to really bring more and more people together in these meetups, or of course we'll do more meetups when the coronavirus is over. We'll do more local meetups, and we're even looking next year to be traveling globally with the team and to meet you guys, because of course you guys are all around the world, right? And that's nothing that we want to meet more than hear the stories come from you guys about your journeys, what Guerrilla has done for you guys, how it's changed the way you've looked at the market, how it's changed yours and your family's lives. Because at the moment, we're getting so many people now funded. It's actually crazy. I don't think there's another community out there that has more funded traders. And it just goes to show, right? Why is that? It's because you guys are helping each other out in the community, helping each other progress, right? Helping you really encourage each other. Because again, you have to remember, right? There's that old saying that you may have all heard of, which is you are who you hang around with, right? Who you associate with, you become, right? Why do you think so many people are becoming successful in our community, right? Why do you think that is? Right? Because they're learning, one, from a mentor that is successful and trading. So obviously that's rubbing off on you, but also majority of our community are consistently profitable. So if you come in as someone new to our community, what's likely to happen? You're likely to listen to people in the community. You're likely to learn from people in the community, and subconsciously you're going to grow just like the people in the community, right? And I've said this many, many times to many of you guys that I have been in a community before, right? I was trading slightly different to that community, but I stayed with that community because I liked the community, right? It was more important to me to have a community than it was to trade in that manner, in a sense. So for me, I am very big on community because I know how it feels, especially when you start making it, in a sense, when you start becoming consistent, when you start making great profits, right? There is not many communities out there that have many traders that have so much consistency, right? So of course you have to understand that when you get to that level, who do you want to talk to? You want to talk to people that are already on that level or have already been on that level, right? And how are you going to do that unless you know people in the community are already at that level? So what I'm trying to hit home is that who you associate with, who you mix with, who you spend time with is who you become, right? And of course, if people in the our community are massively consistent, do you not think as a side effect, you're going to naturally become consistent? Of course you will, right? Also, like I said before, understanding that it's a lonely business. Most people out of the trading space, as in anyone that doesn't really know about trading, will always give you negativity because one, they don't understand it, or two, they've been scammed before, or maybe three, they're a little bit jealous because they know that you've actually got a purpose, you've actually got a dream, and you've actually working hard towards that dream. So just understand that the community is there for you guys to take advantage of, for you guys to associate with each other. So I just want to say, anyone that is new or anyone that is even been here for a while, try and get on that community, try and associate and get that mind frame going. Even if you're asking questions, right? No question's a silly question. Now, of course, we're going to do a lot more meetups once coronavirus is over and it starts getting back to normality. Because as you know, right, the markets are still a little bit volatile. Why is that? Because of the coronavirus. Now, I have seen a few people message me and also put in the community forums about when are you going to start putting your stocks back to the usual size, right? Now, just a quick brief detail of how I look at the situation is that if you think about currencies, right? Currencies are owned by countries, right? Every country has different currencies, and obviously what is in that country, right? People, right? People are the ones using that currency. So of course you have to understand, right? When there's a global pandemic like we have right now, okay, and there's uncertainty in each and every country, what do you think is going to happen on the global market with currencies? They're likely to be volatile and they're likely to be unstable. Why? Because the outside of the world, as in normal reality for any human being in any country, is not normal right now, right? It's not normal. So how can you expect the markets to be normal? They're not, right? We're still in this pandemic. We're still in a bit of an uncertain time. No one knows whether we're going to have more spikes and we're going to get into lockdown and all this other stuff, right? You have to understand that the market reflects human behavior, right? Human behavior is at the moment uncertain. So of course, we're starting to see normality in charts because everyone has got control. Every country, in a sense, has control of the virus. Every country understands that we now know we're dealing with it, in a sense. Whereas obviously we know in March and April, there was no certainty. No one really knew what was going on. Everyone was like basically confused, really scared. People were dying. No one was controlling it. Of course, what do you expect the markets to do? The markets are going to be erratic. It's going to go up and down erratically. Why? Because the countries are unstable. So if the country's unstable, the currency for that country is likely to be unstable. And again, it's based on human behavior, which again was unstable. So understanding, guys, that I get the questions in when we're going to move it back, but understanding that, again, it comes down to if the market still has this pandemic and it still has this bit of uncertainty, then the markets are still going to have that little bit more of volatility, right? So for me, I'm not going to be moving them anytime soon until the markets and the world suggests that we have control of this pandemic, right? And again, it again comes back down to greed, okay? Do I care that I make a little bit less profit? Does that bother me? No, it doesn't at all. And it shouldn't bother you. Yeah, last month I made 22.5%. And if I'd have had a slightly smaller stop loss, maybe I made 30%. Is that going to change much about my trading? No, it isn't. So understand, guys, it's about being patient and understanding that is it worth having a 10 pip stop loss, knowing that we still got a little bit of volatility and you're going to get tagged out so that you can gain an extra 1% or 2% on that trade? It's not worth it. Understanding that it's about being patient, and it's also about understanding reality. When you're a trader, sometimes it's about having slightly bigger stops, right? You're going to get a little bit less profit, but that's completely fine, right? Because you understand that we are in a global pandemic, right? It's not just one of these things that happen. We're in a global pandemic, right? So it's going to affect the whole market in a sense. So just understand it's about being patient. And for me, I will not be changing my stop losses anytime soon until I really feel that the pandemic is under control. And understanding I had a 12 pip stop loss before, I've gone to 15. It's not a massive difference, guys, but that's how I feel comfortable with. And that's my own choice. Again, if you choose to jump back down to 10 pips, or you get to choose whatever stop loss you want, that's completely down to you. But understanding that we are still in these volatile times, and you can just understand that we get a spike in one country and then we get a spike in another country, all of a sudden the market's going to start getting erratic again. Why? Because people are going to get a bit fearful. People are going to get scared. Again, human behavior. Okay. Now, also another thing that I wanted to talk about was I saw someone put up in the community this week asking about a pair, and he basically said, I know this pair is a great pair, but I can't make it work for me, right? The answer is, again, there. I can't make it work for me. If a currency pair doesn't work for you and it's not very profitable, then why are you trying to squeeze that pair, right? Is it because you say, right, I know this pair has a 300 pip daily range. I know it has a 300 pip daily range. I know it can move 1,000 pips in a week. So I want to make it work, right? The difference here is I want to make it work, okay? Now it's great, but if a currency pair you're trying to look at is very volatile and it doesn't suit your plan, why do you have to trade that pair? Is it because your ego or greed is getting involved, right? And I get it, but what I'm saying is the answer's in the thing. I can't get that pair to work. If you can't get a pair to work, move on. Find a pair that does work for you. Don't stick with a pair just because you know it can move in a day, right? As I've stated many times, the pound Japanese yen, right? Many people within our community trade it and trade it very well. For me, it doesn't suit the way I trade. It doesn't suit my trade plan. I've back tested it and I don't feel comfortable trading that pair. It's not to say it doesn't work, but again, it doesn't work for me. It works for others completely fine. And I'm not saying that I'm right for not trading it and they're wrong for not trading it. At the end of the day, it works for that person, and that's how it's about. And it's about taking your time, guys, and understanding that sometimes if you're looking at something and saying, I want this to work for me, I know that it can make 1,000 pips a week, I want this, I want that. Well, is that really a professional way of thinking, right? Is it me like saying, I know gold, for example, moves massively. Just because it moves massively, I have to trade it? No. Right? It doesn't make sense. So understand, sometimes think about why you're doing certain things, because again, it comes down to mindset. It comes down to understanding, why am I doing that? Why am I trying to force myself to trade a pair that I'm not comfortable trading, that I can't make successful? But yet I know that other pairs that I've tried are successful. But yet you want to spend all your time and effort trying to make this one pair work for you. I just say, be careful when you are trying to push yourself to do things, because understand that some pairs will not work for you, just like pound Japanese yen doesn't work for me, right? That doesn't mean that it doesn't work for others, right? I know many people in the community trade that pair, the beast, and they make a hell of a lot of percentage. But that doesn't mean that I have to trade it. I back this and I'm not happy to trade it, and I'm happy to stay away from it. That doesn't mean I'm going to get jealous when someone else makes 15% on that pair. You know, understanding that it's about you, understanding what works for you. Again, staying in your own lane, not worrying about other people. Okay. And again, I'm very happy to see other people succeed on other currency pairs. But again, understanding that if it's not going to work, don't force it. Okay. So guys, what I want to do now is I want to just, actually, I was going to get back into the forecast there, but I just want to mention also that we do have the V meetup, okay, the end of the month, which is going to be absolutely incredible. Any of you guys that are brand new, that have never been to any, we do have them on the website under student meetups. So you can go back and watch any of the old ones, but they are always packed with value, right? The reason they're packed with value is because some of our members or students, right, have taken their time to do a presentation for the rest of the community. And again, like I said earlier, right, sometimes they look at the market slightly different to me, right? I might be saying this thing over and over again, but you might not be picking up on it. Then you watch the V meetup and someone says the exact same thing I say, but says it in a completely different way of saying it. And all of a sudden it just clicks. Right? Now you watch my recaps and you see the same thing. You say, oh my God, Josh has been saying this the whole time, but I didn't notice it. I didn't pick it up, right? Again, they are here to help us. They're doing these V meetups. The students, there's 4 of them this month, and they're really going to share ideas and anything that's helped them along their journey. And I think it's really going to help everyone. We've had it every single week, right? Every single month we've done them. They've been value packed. Honestly, even me, I've been watching them like, mate, these are amazing. They're absolutely incredible, right? So anyone that's within the community, make sure you're getting involved. Make sure you're watching it. Again, it's free value that is coming from our students to help you, coming from members that are willing to help each other. Again, no ego involved. Okay, guys? So now what I want to do is I want to get into the forecast, show you exactly what I'm looking at for the week ahead, and show you exactly what's going on in the market, if I'm looking at any trades, what I'm seeing in the market. And again, understanding that we do forecasts. Why do we do forecasts? Because it lets us be prepared for the market. Understanding that we are price action traders and we need to be prepared. We need to understand the more prepared you are, the less hesitant you will be when the market reacts. You'll be ready, right? You'll be ready to go as soon as the market gives you your setup. All right, guys. So here is the euro US dollar. And as you can see, the market's been in this range, pretty sideways. We can see here that we've come up, broke this high, retraced, broke this high, retraced, come back down, broke this low, pulled back up, as we said before, broke the low, retraced, broke the low, retraced. Had this sort of descending nature, right? Then we broke the high, large wick, giving us a massive warning sign, right? When we get a wick, we know that markets are likely to be range bound, right? We then got a wick here at the bottom, okay? Just get rid of that. And then you can see we're starting to get wicks here. So it's giving us an understanding that the market is starting to look a little bit range bound just through price action, right? Then as we can see, the market dropped down, right? Where's the most recent low, right? Once we broke down, we broke that low, what's happened, right? Because if you look, when we're looking for highs and lows, okay, we have to break every candle's high. So you see the candle? That candle broke that candle high. We're on an uptrend. This high broke this candle's broke that high. We're on an uptrend. Even though this candle here is red, right? We still look at the highs, whether we're breaking the highs of the candle. Next candle, we broke that high. We broke that high. Next candle did not, which means that whole move there was part of the uptrend. We didn't have any counter trend move. Now we can see this candle here, right? Didn't break this candle's high, which means it's a counter trend move, okay? And obviously, if we're going back to find the most recent low, every single candle broke the high except this one, which means this is the most recent low, right? We come back on current price, that's the low, right? So of course, when we have this counter trend move, we're looking at it and saying, right, what's going to happen now? The counter trend move broke this low. What did it do? Retraced, okay? Giving us a warning sign already that what we expect to happen is we expect some impulsive break of the low. We expect it to break it impulsively and to create a nice continuation bunker bomb, right? That's what we're looking for. But what happened instead? Well, what happened instead is we broke the low and we retraced. What is that giving us an indication of? It's giving us an indication that the momentum to the downside can't be sustained, and we're more likely to be range bound. Also understanding we've got wicks at the bottom. What did we get straight after that? We got a range, right? Again, this is why we investigate price action. This is why we are price action traders, because some people will look at that and say, right, that's going down, right? It's got a nice impulse. If I get a continuation bunker bomb, I'm in, right? But because we are price action traders, we see that we broke the low and retraced. We also see there's a large wick. So we know we're going to be range bound. So we won't be taking any shorts here. Why? Because we can see momentum to the downside can't be sustained. What's happened? We then shot back up, right? So again, we've used our price action skills. We've looked at that bit of market and we've understood that we don't have to get involved in that market because again, it's still part of this range, right? This sideways range. We clearly see it and we can see that. Then what's happened? The market started to come back up, right? We can see that where's the most recent high? What if we go from the low? Every candle broke the low, okay? Except this inside bar here. So it would be above that level there, right? Now, as you can see, as we started to come up, we can clearly see that the market is losing momentum. Even before we break this high, we can see that we're breaking in the highs inside and retracing, breaking the highs, retracing. We then broke the most recent high, retraced, broke that high, retraced, right? So we can clearly see again that we're having an ascending nature. We can clearly see that the momentum to the upside, once we broke this high, what's it telling us? What is that telling us? Is that telling us that we want to go up, right? No, we're price action traders. We can see that we can't be sustained to the upside. We can see that we're breaking highs, retracing, breaking highs, retracing, right? We know that the market is more likely to go down than it is up. Why? Because that's showing us that the market is limited to the upside. Now, again, once we broke this high, we go back down to find the most recent low, right? Where is that? It's the inside bar. So once we broke that, we then had a trend change. And now we have to wait to see what happens next. Now, again, understanding Mondays and Tuesdays are days that are very corrective, right? We know that. So we understand that quite easily we can have a retrace here, go into a little descending, go back into an ascending. And again, continue with this range that we're stuck in at the minute, right? And if that happens, then we're happy to wait on the sidelines. Now, of course, we started to see this ascending nature at the top. So we've had this move up, started to see this move. You see this ascending nature. So quite easily what can happen is we can have an impulse and a nice continuation bunker bomb, right? And if that happens, of course, I'll be involved because I know it's high probability, right? But understanding that it is Monday and Tuesday, and what I'll be looking for is to see how we react when we break this low, because quite easily, we could easily just pull back up, right? Then just start ranging within here, break that high, and just start ranging. Why? Because we know that if we break a high and retrace, break a low and retrace, we know we're likely to be sideways. And we know Mondays and Tuesdays are predominantly corrective. So we're likely to be more patient, okay? Also understanding that if the market does come down and offer us a nice descending nature, right? Now, we can see it clearly descending. We can see price actions just breaking these lows, retracing, breaking these lows, retracing, breaking these lows, retracing. Then what we look for, guys, is we look to see what happens when we break this most recent high here, okay? Are we going to break it, retrace, and just start creating, like I said, this bigger channel? Very possible, right? Or are we going to get a nice impulse and a nice continuation bunker bomb, right? And you all know now, right, that even though it's Monday and Tuesdays and it's predominantly corrective, sometimes on a Monday we do get some nice moves. So again, we have to forecast and be ready for those moves, okay? And of course, if we get a descending nature showing us momentum to the downside is limited, and then we get this nice push above the most recent high, so we've had a trend change, then we've had an impulse, then we have a continuation bunker bomb of that impulse. Then of course, I'll be involved in that. Also, what can happen is we can get a nice push, pull back, and then go. Again, it's very high probability bullet, and I'll be happy to take that. Understanding that if we do see wicks and start seeing a bit of shitty price action, I won't be involved in that. Understanding that Mondays are corrective. So of course, I understand that if we're breaking, I want to see a clean break. I want to see a nice push, pull back to that level. But also understanding, guys, that we are low risk traders, right? We risk a maximum of 1%. That's all we're risking, right? I know Grant's put up a nice post in the community forum. If anyone wants to watch that about risk, and it shows you that we are only risking 1%. You would have to lose nearly 100 trades in a row to lose your account. It's not physically possible if you're trading the way that we're trading. And one of the key things about our trading and the way that we trade is that we minimize our risk very quickly. So we have a 1% risk here, but as soon as we break that high, we minimize that massively, right? Our risk is managed so quickly. And this is another key thing for consistency, because again, imagine, right? So for example, you have this here, pulls back down, right? And for example, we get involved here. We have our stops here. Now, this is the most recent high. Now, even if we come up here, right? And for example, we have this corrective nature, and all of a sudden it just shoots down, because obviously you have a descending or ascending. What has that done to us? Well, we've reduced our risk significantly, right? To something like 0.2, 0.3%. So even if the market has decided that it wants to break this high and retrace and then continue the opposite way, we significantly lowered our risk. And this is another key thing with our strategy that allows us, like I said, to cut our losses short, right? And let our profits run. That is the key characteristic of what we do here. We let the profits run. We know that as soon as we get involved in a trend, that we are going to take as much profit out of that trend as possible, right? Now, also understanding that what could happen here is quite easily the market could just shoot up from here. And again, understanding that if we get this impulse, we want to know what happens after the impulse. Is it going to give us a continuation bunker bomb? Very possible, okay? Or is it going to come up and start creating an ascending nature and then drop and then give us a continuation bunker bomb? Again, very, very possible. And this is why we have to look at price action and really investigate price action, and also wait patiently for our setups. We have to understand that at the moment we can see we're clearly in this sideways move. We can clearly see at the moment the market has broke lows, retraced, right? Broke highs, retraced. What's likely to happen? We're likely to be range bound. So we understand that, but again, we always have to forecast all scenarios, because as I've said many times, we don't have a bias in the market. We let the market decide where it wants to go. If the market wants to go up, that's fine, it goes up. If the market wants to go down, that's fine, it goes down. We don't expect the market to do anything. We let the market do what it needs to do, and then we'll take advantage of that. Okay, so that's what I'm looking for on the euro. Next pair is the US dollar, Japanese yen. And as I stated to you guys before, right, that even when I said when this came down and it looked pretty impulsive, I saw this wick here, saw another wick, and it started to look descending. And as we broke the highs, the most recent highs, we retraced, we realized that the market is showing us that there's no sort of momentum in either direction. Then we've come up here, broke that high, retraced. Seen a level up here, got a little wick, started to show us a descending, right? So we can clearly see that there is no real momentum at the moment to the upside or the downside, right? If you look at the high here, we come back to find the most recent low. What's happened? Broke the low, retrace. So for me, again, I'm just going to wait patiently with this pair. Yes, I did look at this and say it looks nice, but to me, it's not impulsive enough, right? And again, understanding this is Friday, okay? This is Friday afternoon, and understanding that the markets, they can just wait around and not much really happen. Now, of course, it started to come down, but again, if you look at the impulsiveness of that, it's not massively impulsive. And as we get to the end of the day, it starts to slow down. So for me, I'll be waiting patiently with this pair. What I would want to see is a nice impulsive break of the high and a nice continuation bunker bomb, and I'll take that, or a nice impulse down and a nice continuation bunker bomb. Again, waiting patiently, understanding this pair is a corrective pair, and understanding Mondays are normally corrective. So I wouldn't be surprised whether this comes back up, pops down, starts descending, right? Then starts ascending and then descending, right? We know that the market's ascending here, coming down, descending, and then ascending and creating this larger range. So again, for me, I'm going to wait patiently with this pair till I see a nice impulse above the most recent high or a nice impulse above the most recent low. And understanding that, how are we breaking those highs and lows? Are we breaking them correctively? Are we breaking them impulsively? They're the questions you need to ask yourself. Okay. Next pair I'm looking at is the Aussie US dollar. And again, guys, this is one of my favorite pairs to trade the bullet. But again, understanding when the market is not offering us anything, we don't take any trades. Okay. The market has just been very sideways. And you can clearly see there's loads of wicks everywhere. There's no real sort of momentum in any direction. And you can see that we're just going ascending to descending, which is quite common with these pairs. They do like to range quite a bit, and they do go from ascendings to descendings. So for me, with this pair, I understand, right, that the market hasn't got any sort of momentum in either direction. So again, I'm going to wait patiently, right? We don't have to rush any of this, okay? We can clearly see, right, that even if we look at the previous price action, what's happened? It's come down, broke the low, large wick, retraced, broke the low, retraced. Okay, now from this point here, we come back up to the most recent high from the low above here. What happens then? Large wick, retrace. What happened after that? Broke the low, retraced, right? So clearly we know that this was likely to happen. We were likely to see a range, and I think that will probably continue on Monday and Tuesday. And again, we're just going to wait patiently, right? Just wait patiently for a nice impulse in either direction, or to see a nice ascending or descending nature. Now, obviously, the only thing that we care about is when we break this low, or when we break that high or the low, because inside here is no man's land, right? And then we've got to work out, right, what's going to happen when we break that high. Are we going to break it, retrace straight away, start ascending? Very possible. If that's the case, then we're going to wait to see what happens when we break this most recent low, right? Are we going to break that impulsively and get a nice continuation bunker ball? Very possible. And again, as long as I see nice clean price action, I will get involved in that. But again, understanding that the market's been very sideways. So if I see a descending nature like this, and I start seeing loads of wicks inside it, right? I'm not going to be getting involved in that, because I understand the market is still very range bound, right? Now, understanding, I will trade the bullet with this pair, but I'm going to be extra cautious just because of what I've just said, right? I want to see a clean break, pull back, and then go. Again, knowing it's high probability, but also understanding that it could be still corrective. Now, obviously, guys, we are only risking 1%. We are low risk traders. So again, if you want to take that risk, there's nothing wrong with that, okay? It is a high probability setup, but do understand, right? We're getting information here that we're likely to be sideways. We're getting information here that we're breaking the highs, retracing, breaking the lows, retracing. We know it's likely to be range bound. So obviously, if we break this, pull back straight away, we know that that's likely to just stay within that range. So again, I will trade the bullet with this pair, but again, I will be extra cautious, and it will have to be a nice, clean bit of price action. All right. So also what can happen, as we can see now, right? We can clearly see that this is an ascending nature inside the range. So inside the high and the low. So quite easily, we can get a nice impulse down and then a continuation bunker bar. And again, if that's the case, I'm happy to take it. Why? Because it's showing us that the momentum to the upside, can't be sustained. Breaking the lows, retracing, breaking the lows, retracing. Sorry, the highs, breaking the highs, retracing, breaking the highs, retracing. We can see the momentum to the upside can't be sustained. Now, of course, what could also happen is the momentum to the downside might not be able to be sustained. And then we get a large impulse up, right? Again, that's very possible. And if that's the case, it's high probability because we can see it's come from a descending nature. We then broke the most recent high with some sort of momentum, and then we want to continue that trend. Okay, so that's currently what I'm looking for with this pair. But again, as I've stated before, I will be extra patient with this pair because it is giving me massive signs that we're going to stay corrective. All right. Next pair I'm looking at is the US dollar CAD. And again, like I stated to you before, markets have started to descend here. We saw this impulse down, pretty impulsive. But then what happened after the impulse? We clearly saw that we broke these lows, retraced, broke these lows, retraced. We've then come back up, broke the highs, retraced, broke the highs, retraced. And we haven't really, to be honest, seen any sort of momentum. Even if you looked at this and said to yourself, that looks like momentum. Well, what happened after that? Broke the highs, retraced, right? Ascending nature, more likely to drop down. Okay, we know that. So are we going to get involved? No. Then what happened? We broke the high, retraced, come back down. Where's the most recent low? Right? Most recent low is here. Broke the low, retrace. Okay, again, it's a CAD pair. CAD pairs are predominantly corrective. So I expect this sort of correction or this range-bound sort of market to continue, especially on a Monday. But again, understanding that I'll be looking for a nice impulse up and a nice continuation bunker bar, right? Or a nice impulse down and a continuation bunker bar, right? That's what I'll be looking for. Okay, understanding that price action at the minute is very range bound. Okay, we can clearly see that we've just broke this low. We then look back and every single low before prior to that has broken. Okay, we then see that there's an inside bar here, which is the blue candle. Okay, so that would have been my low and high. So of course that's why I've had it here, right? Because it's after that candle, just broke it slightly. So that's my high. Obviously we're on a downtrend at the minute. And we want to see what happens next, because quite easily we could just start ranging, right? And we know that's very possible as we are very corrective at the minute. Okay, so that's currently what I'm looking for with this pair. Next pair is the Euro Japanese Yen. And again, as I said to you before, it's all about understanding that when something is offering you nice price action, we can clearly see here that we're in a sideways range, right? And we clearly see that before. Why? Because we broke these highs, we retraced, broke these highs, retraced, then we come back down to break the most recent low. What happened? Do you remember, guys? Broke the most recent low, retraced, right? So we can clearly see we're breaking the highs and the lows, and we can clearly look forward and say, right, this is likely to be range bound. Then as we've come down, right, broke this low here, created a large wick, okay? Giving us warning signs again that we're likely to see this range. Okay, then the market's pulled up. Okay, if we go from the low, sorry guys, we go from the low, find the inside bar here. What happened? Broke that high, wick, retraced. So we broke the low, retraced, broke the high, retraced. Is that giving me an indication that we want to go up? Is that giving me an indication that I want to go down? It's giving me an indication that at the moment the market doesn't know where it wants to go, right? So of course I'm going to stay patient. Again, understanding one of the key things about trading, guys, is being patient. And what's so great about our strategy is it allows you to read price action and understand when to be patient. Because for me, I think that is the key thing to being a consistently profitable trader, is understanding when to be in the market and when understanding when not to be in the market. They're two vital things you need to know. And that's something that we provide. We provide that because we teach you how to master price action. And when you master price action, you're reading the language of the market. Now, the language of the market is telling you, at the moment, I'm not ready to go up. I'm not ready to go down. So what are you going to do? You're going to sit there and wait, right? And this is what we've tried to do. We've created this strategy to really simplify your trading, to really help you to understand when you need to do something or when you don't need to do something. Now, of course, as you can see here, when the market is coming down, right? This would have been the high. Where's the most recent low, right? Most recent low is here. Didn't break that. Created this range. Come back up. Broke the high. What happened? Wicks, retrace. Do you think at this time that I want to get long or I want to get short? No. Why? Because the market has no sort of momentum in either direction. So all I'll be waiting for is a nice push up, a nice continuation of that push. Because what is that telling us? That's telling us that momentum, that price action has chose a direction. Then we want to see a continuation of that direction with a bunker bomb. Or I want to see a nice push below the most recent low. And then a nice continuation bunker bomb. Again, understanding that the market then has decided a direction it's chose to go in with momentum. then we want to get involved in the continuation bunker bar, right? But understanding, guys, that how are we breaking these highs and lows? Because quite easily with this pair, we could just range around inside the highs and lows. I think that's very, very possible. But obviously, if we do come up here, break that high, retrace, and start ascending, we understand what's going to happen next, right? And this is where we let the market decide and not us, because we know this is our most recent low, right? Now, if the market decides it wants to push down with momentum and then give us a nice continuation bunker bomb, then of course we'll be involved in that. Why? Because the markets chose to change trend, okay? It's chose to change trend. Once it's changed it, it then continues in that direction with momentum. It's given us an idea that the market has now chose a direction, and then we look to get involved once we get that confirmation from the market. Not before that. We don't say like here, right? We don't say here, this is going to go down, right? We don't know that, because as I've stated before with this pair, the euro, Japanese yen, sometimes the market will go up, right? Now we're not in that market. We don't care. We're still on an uptrend. Then all we need to do is look at what's going to happen after the impulse, right? What's going to happen after here? Are we going to get a continuation of this momentum? If so, then again, I'll be looking for a bunker bomb to get long, right? Or are we going to get this nice push up and then get an ascending nature? If we get that, what normally happens? We normally get a drop down, okay? So again, we'll be prepared for that. We'll understand that the market has shot up, it's lost momentum. Momentum can't be sustained to the upside. We've then broke the most recent low. So the market has chose to have a trend change with an impulse, and then we look to get in a continuation of that. Again, understanding, guys, it's not us making a decision. And understanding this is going to help you massively grow as a trader. And especially for a lot of you guys have sent me messages saying that you've gained your FTMO funding, you've gained private investments, and you've understood that even when you've grown these accounts. I remember someone told me that it had £1,000 account, right? They were trading £1,000, they done an FTMO, they passed and got 100K, right? Then they done another one, but the other one they done two in a row. So for example, they had one now that they were funded, and they done two more challenges together, right? Now this person has now got 3 FTMO accounts, okay? Now they're trading £300,000 and they only were trading 1,000 before. What they've said to me is they don't feel any emotions at all. They said the reason they don't feel any emotions at all is because they know exactly what they need to do. They have their trade plan and they let the market make that decision. They don't use discretion in a sense that they just close a trade. For example, the market moves back and it retraces and they close, right? For no reason at all, just because they're using discretion to close, right? Again, understanding that we don't have discretion in our management, no discretion at all. Whether you're trading a £100 account or a £100 million account, you will always trade it and manage it the exact same way. So it gets off of that. Also, another key thing with the psychological side, understanding that it's not your decision that the market has taken you out. It's the market's decision. The market has decided it doesn't want to continue, so it breaks down, right? And it changes trend. Now, again, understanding, well, I didn't make that decision. The market made that decision. How much easier is that on your mindset? How much easier is that on your mentality, understanding that you're not making the decision, but the market is? It's not you that's wrong. The market has decided to do something and it's not down to you, right? Now, this is massive, right? You really don't understand that how big this is, because when you're using discretion, and I keep mentioning discretion more and more and more because people always ask me about it. And what I mean by discretion is using your own experiences, right, to trade. Okay. Now, what I mean by that is you will look at a chart and you'll say, right, the market's moving up now. We're getting to a certain level. I think the market's going to go down. So I'm going to sell, right? You've made that decision based on you looking at the market. Okay. Now, once you're in that, all of a sudden the market moves in favor. Okay. It moves in your favor, maybe, I don't know, 1%, right? And you put your stops to break even. Why have you done that? You've done that because you've used discretion to move your stops. right? Not because there's any reason to do that. You've just done it, right? There's no reason for you to do that. You chose to do that because that's what you do, right? Again, that's your discretional choice. Now, again, what happens? You get knocked out at break even and the trend continues, right? Oh my God, I should have not put my stops at break even. Why have I put my stops at break even? If I was not put my stops at break even, I would now be up 5%. How's your mentality right now, right? Your mentality is you arguing with yourself. Why? Because you made that decision to move your stops to break even, right? And this is the key factor that I'm trying to say. With our strategy, you're not making them decisions. You're making a decision based on what the market has decided to do. So the market decides to take out our most recent high, so you move your stops to below the most recent low, as we all know, right? You do that every time. It's not you choosing to do that, right? It's not down to you to discretionally say, I want to do that. It's the market telling you, right, we've done this, you need to do this, right? And understanding that this is going to help you all. And that's why so many people within our community are progressing so rapidly, right? Even when they get in these large accounts, large funds, 7-8-figure accounts. I've got people in the community that are trading and they don't have these emotional burdens, right? This is what I'm trying to understand, guys, is that how much when you're not using discretion, it's going to help you psychologically. All right. Sorry, guys, we're on a bit of a tangent then, and sometimes I do when I get passionate about things, because people don't really understand that how we are trying our best, right, in the guerrilla community. Us and the team are trying to benefit only you. All we're thinking about, guys, is getting you guys consistent. So when I'm telling you to do certain things with your management and do all of these things, there is massive reason behind it. It's not something that I just said, right, you're going to move your stops here every time you break the highs and lows. Right? It didn't just come out of nowhere. It came out of understanding the emotional impact that comes with discretion. Okay. So yeah, let's get back to the forecast. So as you can see here, guys, so I do believe we're likely to be range bound. And again, what we want to look for is how we're breaking these lows and highs. Okay. If we see a nice push up or down. Next pair I'm looking at is the New Zealand US dollar. And as you can see, pretty sideways. You can clearly see that there's no momentum to the upside or the downside. Okay, as I've stated with this pair, we normally see a large impulse up or down. We can clearly see here breaking highs, retracing, come back down. Where's the most recent low? Inside bar here. What happened? Broke the low, retraced, come back up, broke the high, retraced. Again, indicating to us that we're going to be range bound. So again, all I'm waiting for is a large impulse and a nice continuation of that impulse, right? Or a large impulse down and a nice continuation bunker bomb. Again, that's all I'm waiting for. I want to see commitment. I want to see some nice momentum down. If it shows me some nice momentum, it shows me some commitment, then I need to be patient and wait for a continuation of that. Because we know these pairs are pretty corrective. So quite easily, sometimes you'll get an impulse and then you'll just get a descending nature and then an ascending nature, right? We know that. So we have to understand that we have to be patient, and we know that when these markets go, they really go. But again, understanding that the impulses on this pair need to be large, okay? Next pair I'm looking at is the New Zealand CAD. As you can see, guys, we haven't really seen any sort of momentum, this sort of push down, okay? We had large wicks here giving me a warning sign anyway. It's a CAD pair, broke the lows, retraced, okay? Started to see a little bit of corrective price action here. Then what happened? Broke that low, retraced, broke that low, retraced. Again, understanding from the low, went up to the high, retraced, okay? Broke that high, retraced, broke that high, retraced, okay? Understanding also, if we look at price action in a bit more detail here, we understand that we're only looking for momentum anyway. So we know that we're not going to be trading any of that. But if we look in depth, what's happening again here, as we're breaking the highs, okay, as we broke these highs here, retraced, we go back down, there's an inside bar here, broke the low, retraced, okay. So again, indicating to us, we're likely to be range bound. We know CAD pairs are predominantly corrective. If we know that, we don't want to get involved in it. right? We know that we're looking for a large impulse. And again, anyone that's backtested this pair understands that the impulses on this pair are very large. Excuse my drawing. They know that they're very large, and that's all I'm going to be waiting for. But also understanding one key fact, right, especially with this pair, is that when we get a large impulse, generally the correction is very quick, right? Only maybe a few candles. So understanding that's why I'm always prepared for them, because when they do move, they really move, okay? As you can see, I don't really trade these pairs often, but again, I will always forecast them knowing the potential will be there, knowing that the more corrected they've been, that when they do move and when they do start trending, we're going to be involved in that trend, okay? So I'm very happy to wait patiently until the market offers that. Also, sometimes we get an impulse down, and a key thing is what happens after the impulse, because sometimes we get this little descending nature and then an impulse in the opposite direction, right? We do get that sometimes, and again, that's part of my plan, because what they're thinking is everyone's selling now. They create this descending nature. Us as price action traders understand that the momentum is slowing down. It can't be sustained. Then all of a sudden, we get this break of the most recent high impulsively, and then we get involved in that, whereas most people will be stuck selling. Okay, so it's just understanding what we're looking for in the market, and also understanding being patient, guys. There's no point being greedy. We understand that even last month, as I said, I only took a few trades, yet I managed to extract 22.5%, right? This month, I'm already up at 10.2%, okay? And again, that's just waiting patiently, only taking the high probability setups. So again, guys, understanding if you're very new to the community, understand that it takes a bit of time to learn a skill, right? You're not just going to watch a few videos, understand how to trade exactly how I trade. But I guarantee you, if you invest your time to really understand price action, really go through all my previous videos, really understand the mindset, then you'll be like all of the other guys within the community that are already consistent and already smashing percentages. Some of them are even making more percentages than me because they're trading different pairs. And I'm so happy and proud to be a part of this community. All right, guys. So I hope you all have a fantastic weekend, and I'll speak to you all soon.